I think the big contributor to flows tends to be always on a sustained basis. It's really equity inflows and the FDI. We have seen big improvement in equity and portfolio debt flows, but the FDI one is still lagging. And so we think the government needs to continue to take up reforms which gives the confidence to the foreign investors to invest capital on the ground. There have been a few of them which have already been implemented by the government, but more as they are getting taken place, particularly on tax and labor laws. You will see that confidence coming in from foreign investors, and you will see the pickup in FDI, but that's likely to be a relatively slower process than what happens for the portfolio investors. Well, I think the approach to inflation outlook has been taken somewhat differently by us compared to what you hear from other sell-side economists in India or even from some of the investors. I think people are arguing that there are supply-side issues and because of which inflation is high. We would say the only serious supply-side issue which was there in India was the government's intention to somehow allow very high rural wage growth. And all the other issues that you see related to inflation are less related to supply. They were more related to the bad policies like government pursuing very high fiscal deficit or negative real interest rates. So now that rural wages, which we assign as the most important factor in the inflation outlook, are decelerating, we are quite confident that inflation will decelerate towards that RBI's comfort zone of 6% by middle of 2015. In fact, we are assigning a 30% probability to the bull case scenario where CPI inflation could transition to 5% by June 2015.